Welcome to the actual content of Management 215, which is the accounting class for non-management majors at Keene State College. So what we have to first discuss is sort of the accounting system in general. And so that is going to be the orientation of this first module. Now, I have to preface this. You are going to get a lot of new terminology thrown at you. And, we're going to spend the next several weeks going into more detail and everything. So right now it's all just very introductory, okay? So let's dive in. So what we want to do in this module for class is we want to understand about how a company's accounting system is designed, how it's set up, how it operates. We want to just start introducing and explaining some of the concepts and the terms used in the world of accounting. And we want to integrate the idea of sustainability throughout this class, starting at this very first module when we talk about what we mean by a sustainable business, what that actually means. And then lastly, and it's sort of a big topic, we want to identify and talk about the uses of the primary financial statements, how they're connected, and some of the fundamental sort of quantitative underpinnings of all of this. Okay, so that's what we're going to be doing in this series of mini lectures. Okay, they're all going to be brief, and so let's just move forward. So now you can really think of accounting as the language of business. It really is. It's how business people and managers communicate with each other. Accounting is, it has elements of record keeping. It's a specific technique for how we keep the records of the business. Accounting is about control, which is not, the generic use of the term control that we think of. Control in the business world means keeping tabs on whether things are going the way that you think they are. And then it's also about verifying. Control and verification kind of go together. Okay, so accounting is about verifying that what you think has occurred is what has actually occurred. So those are all the sort of roles that an accountant plays within an organization, but the reports and terminology that are generated by the accounting system are really the language of business. Now, this is a link to a cute little YouTube video, which I am not going to click through here during this mini lecture, but I encourage you to do so. It just kind of gives a little history of how our modern accounting system started, which is during the Renaissance in Venice, as Venice was the sort of the trading post for the world, as Europe was trading with the Middle East, and how all those merchants of Venice began keeping track of what was going on with their transactions, with all the trade. So it's kind of an interesting story. Now, the question is, what do we mean when we say a sustainable business? So, companies can have many objectives. Their primary objective, of course, is to make money, I guess, but some companies have additional objectives besides just making money. In fact, most companies have additional objectives besides just making money. Ben & Jerry's ice cream, for instance, has, of course, they want to make great ice cream, but they also want to make the world a better place, right? Newman's Own spaghetti sauce. They want to make good spaghetti sauce, but they want to generate profits to give away to charities, right? But in order to meet any objective, a company has to be profitable. You can't make the world a better place if you don't have the means to do so. And what we mean by profitability is that your revenues exceed your expenses. Okay, revenue is sort of the most important vocabulary word if you're not sure what that means. Revenues are the monies that a company earns by selling its goods and services. Those are revenues. And your revenues have to be greater than your expenses in order to make a profit. Profit is the difference between revenues and expenses. Okay, so in order to do anything, a company first has to be profitable. In addition, a company has to be solvent. Now, what solvency means is that you have the cash flow to pay off your debts as they become due. That's why you'll see like crazy going out of business sales, where you know darn well that companies are selling things for less than they paid for them. Well, they're doing that to create some, at least solvency, so that they can pay their debts even if they aren't being profitable. Right? So solvency and profitability, two sides of the coin for long-term sustainability for a company. But in addition, right, you have to be able to prove that you're profitable. Companies need to communicate to the outside world about their profitability and about their solvency. And they do that through 3 standardized financial statements. The income statement, which talks about profitability, the balance sheet, which talks about solvency, and the cash flow statement, which says where the cash is going. And we'll talk about this more, obviously, throughout the course of this class and in later portions of today's mini lectures. Okay, so that's how a company communicates with the outside world about whether it is profitable over here in the income statement and whether it is solvent over here on the balance sheet. Now, companies can also demonstrate their commitment to being a sort of sustainable company in a broader sense, right? So there's sort of financial sustainability, but then there's also this idea of, the broader definition of sustainability having to do with concern not only about profit, but also about the impact that the company is having on the planet, whether positive or negative, and on the people that are affected by the company, either their customers, the communities in which they're operating, their employees, right? So many companies now are reporting about much more than just their financial sustainability. They also report on this triple bottom line. And a local company that is known for some excellent sustainability reporting is actually Hypertherm, where I have had some students who are from the area who know people who work there. So I invite you to click through this link here and take a look at their sustainability report. It's quite excellent. And we're going to end this mini lecture at this point. You can do a little concept check to make sure that you've understood what I've been talking about, and then we'll move on to the next. Thanks.